going to be talking to SMMT's Senior Trade Policy Manager, Alessandro Marongiu, about the SMMT's trade report published just this very morning. Now, the report takes us through many aspects of the current opportunities, but also the issues that the UK faces as the industry embraces the automotive revolution. It struck me that those issues are, by turn, both acute and chronic. Acute, things such as the impending threat of additional tariffs on EVs, and chronic, as we embrace a world where we need to broker international trade agreements and need additional investment to make use of them. Ali, a very warm welcome. Thank you so much for talking to me this morning. Now, listen, last time we ran this event 2 years ago, we were coming out of a pandemic. TCA between the UK and the EU was just coming into force. Bring us up to speed, Ali. What's changed since then?
Well, good morning, everyone. And 2 years ago, we were here explaining why the industry fundamentals remain strong in the face of a very significant downturn. Now, today, we definitely have an air of optimism. Because we are coming back from the impact of the pandemic, and we are coming back quite strongly. Just 3 years from the start of an almost endless series of global and regional crises, the UK automotive sector can already aspire to reclaim its position as one of Britain's most valued trade hubs. And last year, the automotive industry delivered £94 billion in trade value, and is now on track to fully regain its pre-pandemic role as a £100 billion plus trade generator by the end of the year, provided that current trends hold. Now, exports of automotive products already represent almost 12% of all UK exports of manufactured goods, and that's just a little step away from the 13% threshold that we recorded in pre-pandemic times. So we're getting there.
So, Ali, if that's what's different, can you just talk me through what isn't different, what hasn't changed?
Well, the underlying strengths that I've referred to haven't changed much, and they're driving the recovery. We continue to ship abroad almost 8 out of 10 cars produced in the UK, and at a more granular level, the percentage of cars produced for exports in individual regions ranges from a minimum of 65% in the east of England to peaks of 87% in Wales. Now, about 80% of our car exports continue to be directed to the world's 4 largest economies, namely the EU, the US, China, Japan, but we export to all corners of the world. And looking at imports as well, we also remain open to the world, with more than 90% of new cars and vans registered in the UK being imported last year, predominantly from the EU, but with China rapidly climbing the ranks. But so these trends might actually seem familiar to an expert's eyes, but much has changed if we look below the surface.
All right, well, let's have a look below the surface, scratch underneath. Tell me, give me some examples.
Well, volumes for a start. In 2019, we exported more than 1 million vehicles, and we imported more than 2 million new cars and vans. Today, export volumes remain almost 40% below that level, and we import almost 500,000 fewer vehicles. Now, inflation plays a role in obviously inflating values, but this difference between values and volumes points also to a different a structural change. With the reduction in exports from volume manufacturers, producers potentially seeking higher profitability and adjusting to the different cost structure of, in particular, of lower emission vehicles.
Well, Ali, talking about low emission vehicles, what's their role in the sector's recovery? How important are they?
They are absolutely crucial. There are some industry segments that have countered the trend on export volumes too. So, for example, commercial vehicles have performed exceedingly well, luxury sports cars. But trading electrified vehicles truly drives the sector's recovery, with export volumes already 30% above pre-pandemic levels today. And if we look at values, in value terms, the change is absolutely stunning. In 2019, before the pandemic, EV exports from the UK to the rest of the world were worth £3.6 billion, and exports of traditional vehicles were worth more than £26 billion. Now, last year, EV exports were more than £10.3 billion, an increase of more than 180%, while the value of export of traditional vehicles has almost halved compared to pre-pandemic levels. So the gap is really narrowing, and EVs are driving the recovery.
Really interesting about that gap. Ali, talk to me about trade with the sector's largest trading partner. Is that trend continuing in the same way?
Well, the European Union is and will remain our biggest trading partner for the foreseeable future. Now, 2 years ago, as we forecasted, the relative weight of the EU as our biggest export destination, we expected it to even increase after the introduction of the EU-UK Trade and Cooperation Agreement. And this actually happened. Today, almost 6 out of 10 exported cars from the UK are shipped across the channel. In 2019, it was less than 55%. So the value, the relative weight of the EU has even increased as an export destination. However, following the introduction of new trade barriers after Brexit, bilateral automotive trade between the EU and the UK has generally struggled to recover. Now, again, in this context, EVs are a bright spot. In value terms, exports of UK-made EVs to the EU were already worth almost twice as much as exports of internal combustion engines last year. And when we look at imports of EVs from the EU to the UK have grown in value more than 8 times compared to pre-pandemic levels, from 1.5 billion in 2019 to 9.6 billion in 2022. And today, despite very fierce competition, as we heard in the previous panel as well, almost 1 out of 2 battery electric vehicles registered in the UK are of EU origin. This said, this clear success story might actually have a very bitter end if the EU and the UK don't act immediately and avert the very tangible threat of tariffs on these very vehicles.
OK, Ali, I want to talk to you about rules of origin. We've already heard a fair bit mentioned today on this issue, but from where you sit, what are the implications about rules of origin and what could or should be done about it?
As any other free trade agreement, the Trade and Cooperation Agreement can help businesses avoid tariffs, but only if the products they exchange, the products they trade, can meet so-called origin requirements. Now, the TCA was the first deal of its kind that actually set time-bound, reasonable conditions for European-made EVs to meet these rules and avoid tariffs. However, the requirements for batteries in 2024 will suddenly become tougher and most likely unattainable, because there are simply not enough European-made battery parts and refined critical minerals to satisfy the tougher rules that are being phased in a few days. So if batteries cannot meet the TCA origin requirements, in turn, this means that finished vehicles are at high risk of falling short of their own origin requirements and face tariffs as a consequence. Now, as Mike mentioned this morning, the expected impacts are very significant. £4.3 billion in additional duties in the next 3 years, with imports from the EU disproportionately affected, and UK EVs suddenly becoming uncompetitive in our largest export market. Now, purely electric vehicles could see their price tag here in the UK increase by more than £3,400 on EU-made vehicles, while UK-built BEVs would face an average price of uplift of almost £3,600 in the EU. So the solution is pretty simple. Do the right thing. Agree a 3-year delay. And with the agreement of the parties, this can actually be achieved within the existing TCA framework through a simple exchange of notes.
Ali, we've only got a few seconds left, so apologies if I'm rushing you a little bit. But just finally, is a 3-year delay enough?
It is an essential precondition, but it's not enough. The TCA is not the only FTA setting over ambitious origin requirements. Only the new agreement with Australia offers a lasting possibility to avoid tariffs on batteries and EVs. The modernization of existing trade agreements with Mexico, Canada, and South Korea, as well as the potential conclusion of new deals with India and other countries, represents an opportunity to open new roads for British EVs. But the underlying problem can only be fixed by stepping up investment and give time to announce the investment to become operational and increase domestic value added throughout the e-mobility supply chain.
All right, Ali, and in just a few words, if you can, why is assembling batteries not enough?
Well, it's not enough because battery manufacturing requires a lot of things. It requires raw materials that are concentrated in a handful of countries, refined minerals that are predominantly processed in Asia, anodes, cathodes, separators, electrolytes. Now, Britain already has a foundational EV supply chain, but we need to scale up production of all these key battery components. Furthermore, we cannot ignore complex regulatory developments that are happening abroad, that are shifting the focus from ease of doing business to addressing other priorities like carbon leakage, corporate due diligence, and ethical sourcing. Now, we don't simply need a new supply chain, we need a sustainable one, and we need a new trade diplomacy to ensure that legitimate policy objectives won't result in unnecessary barriers to international trade. And only by addressing these issues, we will be able to fully benefit from trade deals and open new trade roads for UK automotive.
OK, well, that was all very clear. Thank you so much for chatting to me, Alessandro.